The top business stories live from the Sky newsroom. Inflation jumps more than forecast to its highest rates in over a year, prompting investors to bet against more rate cuts from the Bank of England. Marks and Spencer expects a £300 million hit to profits this year from a cyber attack last month and warns that disruption will last until July. Plus, Bloomberg's $28,000 a year data service experiences blackouts and has delayed a government debt auction. Very good morning. Welcome to Business Live on this Wednesday with me, Darren McCaffrey. Inflation has jumped more than forecast after households were hit by a raft of price increases in April. That's caused traders to slash bets on further base rate cuts, favouring just one more quarter-point reduction by the end of this year. When inflation is now at its highest level since January last year and higher than the 3.3% predicted by economists. The Office for National Statistics said the rate, up from 2.6% in March, was explained by significant increases in household bills last month. Well, the Chancellor Rachel Reeves says the government is working on minimising the impact of the cost of living crisis for people.
The numbers today are clearly disappointing. We want to see inflation coming down after the cost of living challenges that people have been through this last few years. Clearly, we're in a different place to where we were under the previous government, where inflation got into double digits. But we recognise the cost of living is still a challenge, which is why we increased the national living wage, giving a pay rise to 3 million people in April. It's why we're rolling out free breakfast clubs at primary schools to help families with the cost of living, and it's why we froze fuel duty in the budget last year.
Well, our business and economics correspondent Paul Calso has been drilling into the numbers for us this morning. Paul, good morning to you. Inflation up and up quite significantly.
Up quite significantly. Inflation is the most relatable bit of economic data we talk about, isn't it? Because it's the one people feel in their pockets. And this month's rises really are about household and consumer impacts. April is the start of the new financial year. That means bill increases kick in, and across the board, that's what's driven this inflation rise. Energy bills, combined gas and electricity, nearly 7% increase. Water bills, big increase, 25%. The ONS puts that at this month. All that concern about the state of our water infrastructure, well, someone's got to pay for it, and it's us, it's consumers. So that's a big new hit. Something that's not in the CPI figure, but's in some of the wider inflation figures. Council tax increases have gone up as well. So they're the primary drivers of this increase in inflation, up to 3.5%, a little bit more than the consensus thought it was. Also in there, some of the policy choices that Chancellor has made. So excise duty on cars, but not just electric cars, which we knew changed, but they've got higher for combustion engine vehicles. That's cited by the ONS. She talked about the minimum wage going up. Well, that's increased costs for businesses, also the national insurance rise. So that combination has lifted inflation to this figure with obvious potential impacts for the Bank of England.
Yeah, and the expectation is, Paul, that it's going to remain pretty sticky, actually, isn't it? Probably throughout the whole of this year.
Yeah, I mean, the one thing I would say is this: if we look at the forecasts, it's around about what the Bank of England and others thought. They knew this spike in inflation was coming because of those bill rises. They're scheduled in a year ahead. They do forecast it will fall away as the year goes on. The question is, and you mentioned there at the very top, the fact that markets now thinking there might be fewer reductions in rates. The bank met just very recently and they said they would continue on this gradual path of cuts, which has essentially been quarterly. When they said that, they knew this inflation spike was coming. So I do wonder whether there may be a pessimism about how many more rate cuts we get, but clearly lots of food for thought in here.
OK, Paul Kelso, thank you very much indeed. Let's speak to Luke Bartholomew. He's Deputy Chief Economist at Aberdeen, a global investment company. Luke, good morning to you. What's your sense of where we are with inflation? I mean, we know some of the causes behind it, but as I say, the expectation is that it is going to remain a little bit stubbornly high, isn't it? And that's going to have big consequences for what the Bank of England may well do in terms of interest rates this year.
Yeah, that's right. I mean, look, the pop-up in inflation today, or at least some sort of pop-up, was largely expected. That was baked into various other administered prices that were always going to come through. But I think what will be a little bit more concerning for the Bank of England and investors around the expectation for the path of interest rates is that services inflation was elevated as well. And the Bank of England really cares about that specific measure because it thinks it gets at the underlying inflation pressures in the economy. It's not so much about the shocks to energy prices or currency that can sort of come and go from various months due to volatility in those prices. Services inflation is much more embedded in that sense. And the fact that that was a little bit higher, I think, probably does give some cause for concern that inflation will be a little bit stickier. Nonetheless, we probably are relatively close to the peak in where inflation is going to get this year. It should start to come down as the year progresses. The pound has been quite strong recently. Wholesale energy prices are coming down as well. So that combination should bring inflation down. It's just a question of how quickly that happens.
Well, but isn't the point, though, Luke, and I'm reading, the Bank of England's predicting it's going to fall back to its target of 2% by 2027. Now, there's a lot of time between now and 2027, and it's quite unpredictable out there, not least of all when it comes to the global economy.
Yeah, that's exactly right. And look, there's a big debate going on at the Bank of England right now as to whether the tariff shock is actually inflationary or disinflationary. I mean, it's pretty clear for the US economy, for example, that it's going to be inflationary to whack these tariffs on. But for the UK, there's a bit more of an open debate. There, some policymakers think it's going to be disinflationary because global growth is weaker. Other policymakers think it will be more inflationary because global supply chains will break down, and we'll get some of those dynamics we saw in 2022 coming out of the pandemic. So all of which is to say that not only is there a lot of uncertainty about where trade policy is going, you can see that the administration in the US can change its mind on that quite rapidly, but there's also a lot of uncertainty about what those changes in policy will actually do to the economy. So there's almost those two levels of uncertainty there.
Yeah, there's no doubt Donald Trump is very willing to change his mind, and quite often, it must be said. What impact, Luke, do you reckon this is going to have on the wider economy in terms of GDP for Britain? Not least of all, as we've said, inflation may well remain sticky, interest rates may not fall as quickly, but actually, we had pretty robust GDP figures in the first quarter. What are you expecting things to work out, if you like, when it comes to the wider economy?
Yeah, the first quarter was surprisingly strong. That was a nice surprise there. I think some of that might be to do with US demand being particularly strong. They were importing from the UK to get ahead of any, at this time, possible tariff increases. So there was perhaps a little bit of a temporary boost there. I would expect the economy to slow as the year progresses. As you say, inflation elevated, and particularly household bills that elevated, that's going to bite quite hard on consumption. And then there's also this big cost shock that has hit firms, the increase in the national living wage, an increase in national insurance contributions, and that is likely to weigh on hiring and wage growth. I mean, it's a big open question as to whether that's more of an inflationary or an employment shock. Indeed, I think the path of interest rates largely depends on how that debate settles. But at the very least, it definitely is going to weigh on growth somewhat. So okay. I'd be very surprised if the economy doesn't slow through the second half of the year.
OK, Luke, really appreciate your time this morning there from Aberdeen. Thank you very much. Now, the other big story today is that Marks and Spencer has said it is expecting a £300 million hit to its profits this year from a cyber attack last month, and has warned the disruption on its online operations will continue until July. The company said it is expected to mitigate the hit to this year's operating profit through management of costs, insurance and other trading actions. Well, David Mullis is a director at the business insurance firm NFP and joins me now. David, good morning to you. I mean, this has clearly been a very significant hit for Marks and Spencer's, with they're still struggling with more than a month on. What do you think the relationship between M&S and their insurance company would have been in trying to deal with this, what is frankly a crisis for the company?
Yeah, incredibly close, to be honest. The cyber insurers are very proactive in terms of the claim process. Obviously, the quicker they get into these things, the quicker they can mitigate costs and try and alleviate any issues that M&S are facing at this stage. The primary thing with this is that these types of losses are very infrequent at this sort of level. Obviously, M&S are a household name. The number we're talking about is particularly big, so it's obviously a newsworthy incident. But irrespective of the size of the business, so whether you be sort of a multinational or a micro SME, the threat of cyber losses is growing by the day, and these types of claims are seen on an almost daily basis. Probably more so at the smaller end, because smaller businesses don't have that resource in order to heavily invest in that robust cyber security program, and that tends to be the area where we're seeing more of these losses. This is an unusual size claim, and it'll be the insurer will be heavily involved sort of on an hourly basis in terms of trying to get this closed up as quickly as possible. Obviously, the quicker they can close up the claim, the cheaper the claim will be.
Yeah, and David, obviously we don't know whether Marks & Spencer has potentially paid a ransom to these hackers, though you might deduce from the very fact that they think that they're getting to the end of the crisis that they may well have done. We know companies in the past, while not disclosing it, have paid ransoms to hackers. If that was the case, and I'm not talking specifically here about M&S, I'm just meaning in general, would insurance companies help cover those costs? Does insurance essentially cover ransom payments?
Yes, it can do. Again, it depends on the program that's been arranged by the broker, but yeah, that would be something that you would be looking to incorporate into a sound risk management program for a cyber loss. Yeah, the ransom value will be covered. That then comes down to whether the limits within the policy are adequate for this size of claim. I say it is an unusually large loss, so definitely there will be cover within the policy. You would expect for the ransom demands, yeah.
And just when we look at, as you say, the future going forwards, M&S has been hit. We know the Co-op has been hit. Harrods maybe too. As you say, this is a problem that is getting worse. What impact is that likely to have in terms of insurance premiums for companies? And potentially, will those costs have to be passed on to us, the consumers, do you reckon?
Well, in part, probably, yes. But, the way insurance is set up is the losses of the few are paid for by the premiums of the many. And when we're having large losses of this size, it potentially does have an impact for the wider business community. Now, what will need to be done here is just making sure that not just putting in place an insurance program for businesses, because that's essentially the backstop when these types of incidents occur. The ultimate thing is to prevent them happening in the first place. So the broker should be working with their businesses to ensure that there is a robust risk management program in place in the first instance. If the worst happens, the insurance policy steps in, but the ideal is that we don't get to that point. Whatever financial reimbursement the insurer makes to M&S won't detract from the fact that they've had huge disruption, huge costs outside of the insurance program, and also some reputational damage within that. So it's key to sort of try and avoid this in the first instance.
Prevention is better than the cure, as they say, David.
Yeah.
Really appreciate your time this morning from NFP. Thank you very much indeed.
Thank you.
We're just going to bring you some breaking news here on Sky News regards to that fire in Bicester at the weekend. And this is a tribute to Martin Sadler, of course, was one of the firefighters who died. He was aged 38, from both Oxfordshire County Council's Fire and Rescue Service and the London Fire Brigades. They have issued Martin's family this tribute to him. Martin was born to be a firefighter, coming from a strong fire service family. It was always in his blood, but it was simply more than that with him. It was his life. The passion and dedication he had for the job was outstanding. From as early as he learned to walk and talk, his days were filled with episodes of Fireman Sam or London's Burning. And as soon as he was old enough to join the Fire Cadets, his career began. He achieved way beyond his dreams, and nothing would ever put a bigger smile on his face. He was a loving husband, son, brother, uncle, and all-round family member, an amazing friend, a committed colleague, and the true definition of a hero. Our world has fallen apart and our hearts are completely broken, but somewhere in amongst it all, we are immensely proud of him and his unwavering bravery. The true definition of a hero there, that is the tribute from Martin Sadler's family, who tragically, of course, died at that fire in Bicester last week. Now, 70% of Britons are collecting absolutely no interest on their cash and their current accounts, despite the Financial Conduct Authority estimating that UK savers collectively hold £250 billion in those accounts. Well, the bank, LHV, today announced it's going to reduce a current account with a market-leading rate of 3.25%. Delighted to say we can speak to Chris Brewster, who is Director of Retail Banking at LHV Bank. Very good morning to you, Chris. I think it's all launching today, isn't it? The first new current account in the UK for 4 years. There's a lot of banks out there. Why do you think customers need another one?
Well, we think that there is a huge opportunity to help more customers by, as you've mentioned, paying interest on the current account. With many banks set up and current account offerings set up for spenders, we think there's something different that we can offer. We're a bank that's set up for savers, and we want to offer a really great rate on that everyday money that customers hold in their current account. As you've seen with the inflation figures today, every penny counts, and we just think it's not right that money deposited with banks just doesn't earn interest. So every penny deposited with LHV will be earning interest.
And you guys are an online bank. We've seen many of those, or a digital bank, if you like, and many of them emerge over the last couple of years. Is that simply because you think, effectively, customers don't need physical banks anymore?
Yeah, I think it's very much a clear trend of a move to digital banking, and we're an app-first digital bank. The beauty of that for our customers is that we can pass on that kind of lower cost operating model and put that into the thing that customers really, really want and really, really need, which is fantastic rates, whether that's on their current account or on their savings products. So there's definitely a transition to that new business model. We're right at the front of that as a brand new bank, using the latest technology to help our customers.
Interestingly, this week on our Money blog, we've been covering how banks are competing for business at the moment. I think TSB, Nationwide and others have been offering people cash to switch their accounts. What makes you think you can kind of take on the big established players here in the UK? And what does success look like for you guys? How big do you realistically think? How many customers can you get?
Yeah, our ethos at LHV is really around simplicity, self-service and really easy to use banking. And that runs through into how we promote our products. It's a current account with a really great interest rate. We're not going to do gimmicky switch to us offers. We know that fundamentally customers want that interest rate on their money every day, and that's what really matters. We think that will appeal to tens of thousands of customers, that 250 billion of deposits that's earning 0%. As you say, 70% of customers, people in the UK, are not receiving interest. So we think there's something that's really appealing to people and will really help.
OK, Chris, thank you very much indeed for joining us there from LHV Bank. Thank you. OK, you're watching Business Live on Sky News. Coming up after the break, we'll be looking at the markets. FTSE down a fraction this morning. All the details after the break.
show of military might and menace. Why should the West trust you?
Frankly, I don't care whether the West trusts us or not.
Sky News. Get the full story first.
Have a quick word for Sky News. Is the West right? Are you fueling Russia's war machine? American journalist Evan Gershkovich is on trial here, but was first on display.
I'm Ivor Bennett, Sky's Moscow correspondent.
$1,500 movies? I don't want this flight to end. Fly Emirates, fly better.
A lot of red on the markets this morning. Let's get all the details. Speak to Joshua Mahoney, Chief Market Analyst at Scope Markets. Joshua, always a pleasure. Let's start with Bloomberg. A significant outage on the terminals this morning, and it's having an impact on government debt auctions.
Exactly. For those that don't know, the Bloomberg terminal is synonymous with trading floors around the world, and the outage that we've seen since around about 9 a.m. today has had significant implications, most notably on the auctions taking place this morning. We had the 4% gilts maturing at 2031 with the UK Debt Management Office. They've had to essentially extend the window that this would be taking place because of that outage. And apparently we've also seen reports in the likes of Portugal and Sweden that we're also seeing impacts to their auctions as well.
Yeah, quite significant that, isn't it? And they don't come cheap either. Let's talk about JD Sports, if we can, because they're warning about an impact of these tariffs, particularly for American customers, and that's having an impact on its share price.
That's actually 8% down earlier today, and certainly this comes off the back of a sort of two-sided earnings report. On the front end, you saw revenues actually posting an impressive 10% rise, 10.2% rise for last year, but then we saw beneath that a decline in terms of the pre-tax profits, down 4% for last year. Now, they've explained away this as saying, well, look, we're investing a lot of money, and that's why you're seeing lower profits but higher revenues. But actually, when you see like-to-like sales for the first quarter of this year, it's also weak as well, dropping 2%. As you've alluded to, really, there's a focus on the impact that tariffs would have on them. And we saw 5% decline on like-for-like sales over to the US. Of course, many of their goods coming from Asia being sold to the US. 40% of their sales essentially associated with the US. So there are likely to be implications going forward, even though that they've said that they don't necessarily think that the implications of tariffs are going to be too big.
OK, and Joshua, just very finally, let's talk about oil. Up a bit this morning, not least of all given concerns about the Middle East and particularly Israel.
Exactly. So it's late last night that we heard the news from CNN reporting that apparently Israel was planning to strike Iranian nuclear facilities. It's not necessarily the first time we've heard this, and they didn't in the past. And this time around, markets are now starting to cool down a little bit. We did see a 3% pop on that announcement in WTI. Of course, this comes at a time when Donald Trump is trying to create a more peaceful Middle East with his current tour or recent tour that has been underway, and the potential deal between Iran and the US for them to stop their enrichment process. But nonetheless, there is a warning that apparently originates from the US security services that Israel could be planning for such an attack.
OK, yeah, I'd say it's up more than 1% this morning. Joshua, really appreciate your time, as always. Thank you very much indeed. OK, that is it from me on Business Live for this morning. Thanks for your company. We're back, of course, this afternoon at 4:30. Do join me then if you can. Up next, it is Prime Minister's Questions with Keir Starmer and Kenny Badenoch live from the House of Commons. It's going to be a pretty good one, I reckon. You can tune in with Jane Secker and Sam Coates. Live coverage from midday here on Sky News. Do stay tuned for that. I'll see you at 4:30.
States of America, it would have an impact in Northern Ireland because of it.